You know how taxes work. When you're employed, they'll usually get taken automatically from your pay. But did you know you might be able to get some of that money back? You find out when you file your tax return. Most people have to do this. Everyone who's earned over a certain amount that year. Check the amount online because it can change. If you earn less than $1,000 a month, you probably won't have to file a tax return, but you can if you think you've overpaid. A tax return tells the IRS, the Internal Revenue Service, how much you should have paid in tax. If too much has been deducted from your pay, which sometimes happens, you'll get a refund. So how do you file? After the year ends, you have until April 15th or the closest weekday. You'll need a form from the IRS called Form 1040. You can find the form online or at any post office or library. Fill out the form, claiming just yourself as an allowance. Make note of any other deductions you have. File online through the IRS website, then sit back and wait for your tax return. Easy. But what if you're not a full-time employee, or you work additional gigs on the side? You might have to report that income too. At the end of January, your gig employer will send you a Form 1099, which says how much you've earned over the course of the year. If you earn more than a certain amount, you'll owe taxes on that income. Luckily, the IRS has a whole gig economy tax center on its website to help you out. Taxes often get more complicated as you get older, especially if you get married or have multiple sources of income. But when you first start out, your filing is likely to be fairly simple to do. One catch: if you've underpaid tax, you'll be presented with a bill instead of a refund. But for most people, filing their taxes is like a nice little bonus.